This is the Aftermarket Radio Network.
Welcome to another episode of Business by the Numbers. I'm your host, Hunt Demarest, CPA with Parmelis & Associates. I really want to do an episode this week about Trump's executive orders, day one of him being in office. No, I'm not going to turn this into a political podcast, but there is rumblings of a lot of financial policy, tax, and some other things that will affect all of us. However, it is still too early, even though as I got this notification, he's officially just got sworn in there. If this was a day or two later, I'd be able to get it to you this week. But for the sake of Carmen Tracy, we're going to do something else. Now, we do have some big news coming out of here. The commissioner of the IRS actually came out a couple days ago and said that he is stepping down because Trump coming into office. What better time to talk about things that you might do this year that could possibly trigger an audit? Before we get into that, I just want to stop and say thank you to you and the rest of the dedicated listeners. Remember, if you want to hear your question answered live on here, just have a question for me or want to be on a future episode, shoot me an email at podcast@parmelis.com. And lastly, we cannot forget our dedicated sponsors, NAPA and Promotive, for being such loyal supporters of the show. If you need a new shop management system or you need to hire the next rock star for your team, give them a call and let them know that we sent you. Hey, did you know that NAPA is on-site training plus 6 days a week support? It all starts when a local representative meets with you to learn about your business and how you run it. After all, it's your shop, so it's your choice. Let us prove to you that Trax is the single best shop management system in the business. Visit them online at napatrax.com. That's NAPATRACS.com. It's time to hire a superstar for your business. What a grind you have in front of you. Great news, you don't have to go at it alone. Introducing Promotive, a full-service staffing solution for your shop. Let them do the heavy lifting and enlist your hiring partner online at gopromotive.com. Let's talk a little bit about what we're going to talk this week and talk about kind of what we buried in the lead there. This week, we are going to be talking exactly like what the title says, how to trigger an audit. Do I want you to trigger an audit? No, of course not. If you want to get audited, you'll probably be able to find out this week. But hopefully what you're going to be able to do is kind of learn a little bit more about how people are selected for audit and how sometimes how you file stuff is just as important as what you file or how much it is. Going back to what we were talking about before, I really wanted to kind of touch on some of the changes I think is going to happen with the executive orders once Trump gets into office. It's too early to do it right now. We should know these here in a couple days. But the news of the IRS commissioner really kind of sent some shockwaves around people. Before we get into the stuff about how to get audited and hopefully how you use that to not get audited, let's talk about this rather quickly. There's been a lot of sweeping changes proposed by Donald Trump, even to so much as getting rid of the Internal Revenue Service and replacing it with something called the External Revenue Service. Do I think that it's going to happen? No, for a lot of reasons, but that's just a lot of change, and arguably you can't do that on executive order. The commissioner of the IRS stepping down is significant. Regardless of what people say, it has been done before. The last time it was done was when Bill Clinton took office in 94, I guess. It was 93 when the previous commissioner stepped down. I believe, don't quote me on this one, you could tell me if I'm wrong, that is an appointed position. Donald Trump has been very loud and proud about his thoughts in the IRS, his feeling about how it's going, and overall direction. Is this something where the writing on the wall is to get rid of the IRS? No, not at all. But what better kind of segue into talking about what we're going to talk about this week? This is not the most common things that are going to cost you money in an audit. This is what is going to get you audited. And so I got to be very clear about those. Causation or the triggering point versus what you actually get in trouble for in an audit are generally two different things. So I'll give you an example here. Let's say that you get audited, your entire personal tax situation gets audited because of gambling winnings or gambling losses. Is that the most common thing to get thrown out? Well, yeah, if you do it incorrectly, but if you have your losses documented on it, it's going to stand up every single time. If I was to say, hey, personally, the most common thing to get thrown out is probably charitable contributions that you don't have proper documentation for. However, no audits are virtually ever triggered by charitable contributions. They are triggered by something else, and the IRS ends up opening it and finding these different things. One of the jokes that I always tell people is, hey, are we allowed to deduct this? Are we allowed to deduct that? There is a lot of different arguments, yes, no, gray areas on a lot of these things. And what I tell people generally is you can deduct anything until you get caught. That is kind of tongue-in-cheek. I'm not advising anyone to do anything illegal here, but the overall aspect is you just don't want to get audited. There could be positions that are 100% justified and arguable. The IRS throws out an audit, you're going to have to take this to court and argue this stuff. The best course of action in an audit is to do everything in your power to not get selected for audit. Before we kind of start going into these things, I will tell you that the IRS doesn't officially release what gets you audited. Even if you ask them, they have no official standards. They say it's all random. Hunt, where do you come up with this episode then? If the IRS officially says that there's no standards of what gets you audited, how do you come to a conclusion? Well, we know that the IRS does, in fact, have reasons to get them audited. Part of Donald Trump's original issues with the IRS dates back to his first presidential run, where there was members of the Republican Party that were individually getting selected for IRS audit. So they were looking like that they were weaponizing the IRS to target specific groups. Was that true? Did that happen? Did that not happen? We're not getting into that stuff. But this has always been the argument is, hey, it's all random. Yet if you look at the data, there are some specific things that I have experienced in my years on what makes the IRS send you a letter or give you a call. Now, is this the end-all be-all on here? No, absolutely not. And the stranger or more obscure it is, you can probably rest assured that that's probably going to be on the more aggressive spectrum. The big thing that you got to think about here when you're looking at audits is the IRS wants to go and they want to find money. They do not want to go and visit you just to say hi. If you think about this, you're looking at your tax return and saying, could an outside party look at this? And if they change one or two or three things, quickly make some money on me? If the answer is yes, then you're going to be much more likely to get audited. Now, what do I mean by that? Are they going to go and audit someone that makes 40 grand a year that has no credits or anything? No, because what do they stand to gain there? The only thing that could possibly come out of this is if they drastically unreported income somewhere else. But that goes even more on this, is when the government comes out and talks of like, hey, we're going to go after and we're going to audit this group, we're going to audit that group. None of it is high income earners. None of it's low income earners. It all has to do with, in their experience, what way generates money for them. I think if you're American taxpayer and you're looking at this objectively, that's the way that you would want the IRS to operate. Hey, don't go after anyone that looks shady. Don't go after anyone that is subjective on here. If it's something that you guys can defend your position and get money back from someone that's not paying a proper amount in taxes, that's the only thing that should matter. Is it? For the most part, yeah. If you look at tax returns and get audited, almost always I could probably say, yeah, this is not a bad one because there's different things out of the ordinary. Anything that kind of puts you on someone's radar, possibly puts you on that radar to be audited. Without further ado, let's kind of get in here. The first one on here is underreporting income. And this is of any magnitude, any size, any level. Even $100 could kind of flag you for audit. What are the most common things to get missed? You forgot you had money at a brokerage, or you forgot that you had a retirement account with your old employer. They send you a dividend statement. You forgot to give it to your accountant. Lo and behold, you get a tax notice sometimes in April, May, June, July, whenever it is. Does that mean that you're going to get audited? Absolutely not. And generally, they come back and say, XYZ taxpayer, we noticed that you missed $1,400 of interest income. We're arguing that we should reduce your refund or you should change your taxes slightly. If you disagree, respond back here. If you get a notice like that, you send it to me, your accountant. A lot of times we look at this and say, hey, is this accurate? Did you receive this interest income? Oh, yeah, I did get that. Okay, well, then the IRS has made the changes for you. We don't need to do anything. Go ahead, pay that bill, take the lower refund, whatever it is. And again, the IRS is not stupid by most standards that you would set on here. If you underreported $100, if you underreported $1,000, that's probably a lot different than underreporting, say, $20,000 or $30,000 or $50,000. If you have a large investment, you probably aren't going to forget about this, but we do see people forgetting K-1s from other businesses, especially if you're a new owner in that business. I will admit that this is kind of a less common one, but I have had a couple situations in the past that this has triggered an audit, even for some pretty small investments. This is not as common nowadays because you guys actually have one very useful tool at your disposal. You can set up an online account with the IRS. If you just search IRS online account, it's through irs.gov. You got to link your photo identity on there or driver's license and some stuff. But the cool thing about that is if you set this stuff up, not only any communications that you get from the IRS, hopefully you don't get any, will all be stored on there, but you can also see any income that's been reported on your Social Security number even before you file it. The IRS is going to get there at some point. Currently, most other developed countries around the world, we don't have to tell the IRS all of the income. We just fill in any supplements that is not already reported to the IRS. It's not how the system works here. The government currently does not have the technology to do so on there, but I advise any of you guys, set up an online account with the IRS. Maybe you never have to use it, but I know that there's some situations where if our clients have it up there, even us as a tax preparer sometimes utilize that to try to avoid the letters, the phone calls to the IRS, and get issues solved faster. NAPA Trax was built from the ground up to make your business more profitable and efficient. They provide an extensive set of tools to increase and track profitability in real time. NAPA Trax offers the industry's best wholesale support hands down. They train your people on site. Yes, on site. They also offer remote refresher training 10 times a week, and customer support is open 6 days a week. Give them a call, visit them, or join our Facebook community today to learn more. They'll prove to you that Trax is the single best shop management system in the business. NAPA Trax is always customized and tailored for your business, whether you're a one-man shop or a large multi-bay or multi-location company. After all, it's your shop, so it's your choice. Visit us on the web at napatrax.com. That's NAPATRACS.com. Is your recruitment process draining your valuable time and resources? What if there was a partner who could take your recruitment efforts off your plate? Look no further. Promotive is your ultimate solution for hassle-free staffing focused solely on the automotive industry. On the web at gopromotive.com. Promotive understands the challenges you face when searching for the perfect technician or service advisor for your shop. That's why we've developed a platform that takes the hassle out of recruiting. Michelle Tanzi from EuroClinic said, "I am a shop owner and recruiting new talent is so time-consuming. Promotive does the majority of the seeking and recruiting. They reach out to the candidates for you, and when they feel they are a good match for you and culture, they make the connection. They follow up throughout the interview process, and we make sure that the candidates are a good fit and the shop is a good fit for the candidates. I admire that they genuinely want both parties to win. They recruited and paired us with a solid B-Tech and Master Tech. Both left a dealership position and are still part of our team. We are very happy with the character and culture match, and both technicians have become valuable team members. Visit our website at gopromotive.com today and join the growing community of shop owners who have found their ideal team members with Promotive." One of the most common ones that gets missed for income, and it's going to kind of segue into our next red flag, which is kinds of income, is gambling. You go to Vegas for a trip. You win big. You win $12,000 on a slot machine. You don't know any better, so you don't mention it to me or any accountant for that matter. And then a couple months later, you go and you get a tax notice. You get a tax notice and say, hey, apparently the MGM in Las Vegas says that they gave you $12,000. We want our cut. You owe us $4,000. This segues into, the IRS looks at different kind of income differently. And gambling is a big one. Why is gambling a big one? Because, well, for obvious reasons. Gambling's not always been reported to the IRS. It's one of the very few things that gets reported to the IRS outside of classic investments and earnings. Why is this such a red flag? Does the gambling winnings or you forgetting your gambling winnings trigger a red flag? Yes and no. I have never had anyone actually get flagged, but you have to think that this is something that definitely could get you. If you have a winnings from gambling of 20-30% of what your overall earnings were, you could get some more letters from them. The bigger thing on here is the losses. Gambling incomes generally are not audited. Gambling losses are. Real quick on here. And here's a caveat. If you're doing any sort of gambling, your red flag went from 0 to at least 50% higher if you're having gambling on here. I will tell you that just having any sort of gambling income or losses is a red flag in itself. The reason is because you are allowed to deduct gambling losses up into your gambling winnings. So let's say that you won $20,000 in blackjack. The only hand that you played, and it got reported, right? Blackjack doesn't get reported, bad example, but let's say you have 20,000 of winnings. If you have documented proof of $20,000 of losses, you're not going to pay any tax because it's all going to get wiped out. You have $50,000 in losses. You can only deduct up until whatever your income is. Best case scenario, you get a wash. Have I had virtually any clients in recent memory that have ever paid tax on their gambling winnings? No. Most of my clients provide documented proof that they lose just as much as they make. Is that the case for a lot of gamblers? I'm sure. Casinos were not built by winners, they're built by losers. I don't disagree with this. Do I have a lot of people that have the IRS reach out to them and say, hey, that's great that you had losses to offset every bit of your earnings? Do they reach out to those clients? Yeah, and they do so a good bit. If you're having taxable gambling winnings, if you're deducting losses on this stuff, continue to do so, right? We're not going to pay tax anywhere that we don't need to. Make sure you document this stuff and make sure that, hey, right or wrong, this is probably going to be something that's going to slightly raise my audit risk. There are other professions out there. If you look, there's arguably a couple of industries that the IRS loves to go after. Art and wine are always, if you talk about tax seminars, art, wine, and horses are like kind of the trifecta of stuff that the IRS hates to see. Why is art, wine, and horses something that the IRS hates? Well, let's look at that. For a couple reasons, the IRS does not like this. First and foremost, we talked about the IRS going after stuff that they feel is material. If we show up at these people's houses, is there something that we can collect on? And if we find something, do they have assets to collect? If you're dealing with art, wine, or horses, do you think that these people have money? Checkbox 1. If we find something we can collect. IRS hates anything that is fun. That is somewhat a joke, but it is very true. The IRS looks at something that you get personal enjoyment out of and also are trying to use as a business much more deeply. So now we got 2. People have money and it looks like it could be kind of fun or people could be getting enjoyment out of this. Number 3, is it hard for the IRS to track or is it easy for someone to misrepresent this? And the answer is absolutely yes. Art, wine, and horses. None of this is electronic. None of this has paper trails. These are high dollar amounts. Very easy to say that you have this stuff in inventory and you don't have this in inventory. Forgery, frauds, yada, yada, yada. If you look at the world of professional or criminal stuff, art, wine, and horses are the big things for the IRS. For stuff in you and I, really gambling's the biggest type of income that I see. Real estate, depending on what you got going on, real estate, flipping, treating these sales differently, deferring gains on that, really that income could get questioned. But I don't generally see, just like we were talking about gambling, I don't really see income that is questioned. It's generally the losses, which leads us to kind of our second to last one here is losses. If you're making money, you're paying the government taxes. If you're losing money, then you're generally either getting money back from the government or lowering the amount that they have to, or that you have to give them. If they're giving money back to someone, if they're giving you a refund, do you think that that raises your audit risk more than if you're owing them money? Yes, it does. Every bit. Anyone that disagrees is a bit silly here. You can show losses. Losses do happen, but you have to know that this could raise your audit risk. The biggest thing that raises your audit risk is losing a lot of money and losing more money than you make. Let's say that you make $100,000 from one business and you lose $120,000 from the other. And if you have the ability to offset those losses, you end up paying zero tax to the government or possibly even losing money as an overall kind of unit. Either showing no income overall or having a large loss offset a large amount of income is a big red flag for the government. 2 reasons on this. One is it is a very likely situation to happen. It's also the easiest way to not pay tax. Hey, have a big gain there, lose a bunch of money in your real estate business, and it wipes all out. Could be true, could be accurate, but you just got to keep in mind that this is something that could have you have a phone call or a love letter from the IRS. Deducting real estate losses and classifying yourself as a real estate professional is what a lot of real estate investors try to do. The thing is if you're not a real estate professional, losses on real estate are limited. If you are a real estate professional, they are unlimited. It is one of the most seldom abused thing. I would say that 80% of people that classify themselves as a real estate professional would not meet the IRS's statute. The IRS has noticed this. They know when they audit people for this, they audit people for home office. It generally is one that they win.
home office is probably not going to get you audited because they don't stand to gain that much. Now, are home office deductions often thrown out in audit? Absolutely. Because if you really read the letter of the law for a home office, yours probably doesn't qualify. You have to use it exclusively for business. And unless you have a massive house, almost no one ever can pass that threshold. Same with real estate losses. If you are a real estate professional, you can deduct the losses. And if you can prove it, you are good to go. However, the IRS has noticed that most of the time, people cannot substantiate the position that they've taken. Last one on here is kind of a little bit about how to trigger an audit, but also to dispel some myths. Filing a return. Does the date that I file a return matter for audit? If you file it within the current due dates, it's not going to change your standing. So whether you file that return today, you file that in April, or you extend it and you file that in September and October, it doesn't matter. I've heard people saying, oh, if you file by the extended due date, it lowers your chance. I've heard people saying if you file it early, usually these audits come 12, 24 months after you even file these returns. Timing really doesn't. If you file these returns late, absolutely, it raises your audit risk. And if you amend these returns, if you're amending a return, if you're going back and especially if you're reducing your taxable income there, make sure you substantiate this stuff because you're almost certain to get an audit. The only thing that in recent memory an IRS agent has told me, if you do this, you will get audited every single time. It is a policy, is amending and changing their income on a sole proprietor or Schedule C. A small business that is reported on a Schedule C of your tax return, an IRS agent has told me, or actually a couple agents have told me that they have a policy. If you go back and you change your income up or down on a Schedule C, I forgot to deduct office supplies, going to add a $4,000 expense, you're going to trigger a full audit on that Schedule C. What does that mean? Do not amend your returns if you can avoid it. We don't amend returns unless we absolutely have no choice. And also do not be a sole proprietor. Most people graduate to be an S corporation. A Schedule C or sole proprietor is the biggest red flag as far as businesses. Maybe all of this stuff will be scrapped when the IRS is to replace by the ERS here in a couple days. But until we see what happens at the inauguration of days following, all of that is speculation. Be smart. Do your taxes with someone that not only thinks about what they are filing, but how they're filing it. A lot of times, this is the difference between get it audited and not. Please share with friends. If you have any questions, comments, or ideas for future episodes, please shoot me an email at podcast@parmelis.com. Just want to say thanks again for listening to the Aftermarket Radio Network. You can find all shows on the aftermarketradionetwork.com and on your favorite podcast listening apps. Don't forget to check out the rest of the shows on the network as well. We got Craig and Speak Up. We got Matt diagnosing the aftermarket and everything else in between. Chris and his weekly blitz. And Kim and Brian with everything marketing for shop owners. Thanks again for joining me on Business by the Numbers. Stay safe out there, and I'll talk to you all next week.
You've been listening to Business by the Numbers with Hunt Demarest on the Aftermarket Radio Network. Follow Hunt on your favorite podcast listening app. Let him know what you'd like him to cover. His email is in the show notes. Hunt is all for advancing the aftermarket.